Oh yes, guys, welcome to another Solana update. And as you know, the price of Solana today is approximately $190. When we did our update 2 weeks ago about Solana, the price was $150. So we have been fully correct this far, and I do expect the price of Solana to continue to the upside. And if you haven't watched this video we did 2 weeks ago, I think you should watch it still, because I go through the roadmap, the tech roadmap, and so on and so forth, the adoption of Solana. But in this video, I want to focus on two things. And this is all about how Solana is the only blockchain that can credibly host financial markets on-chain. Solana is the only blockchain that can have decentralized Nasdaq. Solana is the only blockchain that credibly can offer a decentralized solution in order for all of the stocks, all of the bonds, all of the currencies, everything to move on chain and be to the standard that the institutions expect, that the TradFi markets expect. And this is going to bring trillions of dollars on Solana into the Solana ecosystem within the coming 2 to 3 years. Listen carefully. And before we start, I just want to give you some context. So one of the good things with Solana is that Anatoly, who is the founder of Solana, he's very good at communicating exactly what the network, what everyone needs to focus on. So as you know, for quite some time, he's been focusing on increased bandwidth, reduced latency, IBRL. You read it, it's everywhere, So as a founder, it's very important that you are very clear with what you want to achieve, what's your vision, because then the whole network, which is decentralized, they can now think in their own ways, but they know where to go, they know the big vision, the big grand vision. So Solana has been executing on this IBRL for the past years, and it's been very successful. And IBRL basically means throughput and speed. Increased bandwidth, reduced latency. Everything needs to be faster, more transactions, and reduced latency. All of the infra, all of the consensus needs to be as fast as possible to facilitate and accommodate all of these transactions that are coming through. Now Solana is really coming closer and closer to the final state of speed, and they still have a lot to do, but overall they have done so much, and there's still a lot to do, but it's looking quite good. It's looking quite good, and now they're also starting to speak a lot about instant capital markets. If you go now to Anatoly's Twitter, you're gonna see a lot instant capital markets or ICM. ICM, instant capital markets, ICM. So you're gonna see this a lot. It's basically, in a way, kind of like brainwashing everyone to really think about these things, which is so important that everyone ships and delivers and understands what's all about. So IBRL is all about speed. Instant capital markets is all about bringing Wall Street on chain, bringing all the stocks, all the bonds on chain, and for that you need fairness. And as you will see, we'll be speaking a lot about fairness in this video. But let me play you from Anatoly himself what he means when he says instant capital markets and the end goal. Listen to us.
Guys have been really good at kind of building brand through short strings of words. So internet capital markets, the team is really rallied around that. You hear it, it makes sense, and you can think about all the ways that evolves. With that phrase, internet capital markets, what are you excited about on a 1-year timeline, and maybe what are you excited about on like a 5-year timeline?
I think getting fully approved, regulated, boring TradFi stuff on chain that has claims on future cash flows, like all that stuff that you read in The Intelligent Investor. The 5-year kind of like dream for me is I would want like a startup founder that wants to do this on their own, to be able to take all this open source software and to run their own IPO, which means do all the disclosures, do the price discovery on chain, to use everything in an immutable open source smart contract, and kind of do the Linux from scratch IPO and have the SEC approve it. You should see the fees of doing that basically compressed down to the actual value that they provide, and no longer kind of be based on their ability to control the markets or the regulatory capture and stuff like that.
So as you can see, Anatoly says that we need to bring TradFi on chain, ICOs should be on chain, IPOs should be on chain, all offerings of any kind of financial instruments should be on chain. But I thought it's so important for you to be part of the Solana culture, of the Solana ecosystem a bit, and for that you need to understand these two things: IBRL, increased bandwidth, reduced latency, and instant capital markets, which you will hear a lot about. And in this video you will really understand step by step the entire roadmap for IBRL and instant capital markets. First and foremost, let's speak about the requirements. What is needed for Solana to host traditional financial markets on chain and to become bigger, even bigger than the existing financial markets? First and foremost is the speed. We need to have an even faster chain, we need to have even faster finality. What is finality? It is the most important metric when it comes to TradFi, when it comes to TradFi infra. It's all about how fast do transactions get confirmed. For example, when you send a Bitcoin transaction, it takes approximately 10 minutes for it to be confirmed. When you're speaking about TradFi, it needs to be maximum a few hundred milliseconds. This is how fast things need to be in order to compete with Nasdaq. Number two, very, very important, is all about fair markets. All blockchain markets are more or less rigged today. What do I mean by that? When you do a transaction on Ethereum, your transaction goes into a public mempool, everyone can see what you're trying to do, and before the transaction is confirmed, the miner or the validator can replace your transaction, can front-run your transaction, they can sandwich you, meaning that if they see that you're trying to buy a certain coin, they can get a buy order before you, so that the price goes up a bit, and then they sell the same asset back to you for a profit, all within a few seconds. So when you have the fundamental flaws at the architecture level, it's very, very, very hard to build something that is fair on top of that. And different blockchains are trying to do that. In Ethereum, you have the MEV boost, you have different other things. But the fact remains that all blockchains today have this issue with fair markets. It is very, very easy for validators to censor your transaction, to remove your transaction, to replace your transaction, to front your transaction, and so on and so forth. So if Solana can nail these two things, that it can be super, super fast, and that it can actually have fair markets, and in order to do fair markets, in order to guarantee fair markets, you need to guarantee transaction ordering. If they can achieve this, we will have all bonds, all currencies, everything moving on Solana. Why Solana? Because it's one single L1, it's not a bunch of different L2s. So obviously when you have one unified system, the network effect of that is going to be stronger and more attractive than all of the other L2s, because on L2s, as you know, all of the liquidity is split up. If you make a trade on an L2, that trade doesn't register on L1, and the liquidity, the price discovery is disconnected. So obviously, if you can do everything on L1, it's fantastic. Also, if you can have guarantees of fairness and speed, even more fantastic. And when you compare Solana to TradFi, because it's pretty clear that if Solana is to succeed with this, it's going to eat all of the decentralized competitors. But then if you compare Solana to TradFi, let's say Nasdaq or other exchanges, I'm very, very bullish on Solana eating them as well, outcompeting them as well. Why? Because Solana is global. And all global systems, sooner or later, outcompete their local, siloed competitors. And that's why, if Solana can get this right, all of the national centralized stock exchanges or derivative exchanges, they have no chance. They have no chance because a global permissionless system is always going to outcompete a closed local siloed system. And this is going to happen within the coming 3 years. Let me explain to you exactly how Solana is tackling speed and fair market step by step, and why already next year, in 12 months, they're going to have 90% of the solution live on the network. So let me start speaking about market fairness, and then we will be speaking about speed. The reason I want to focus on market fairness is because everyone else is focusing on speed. There are many videos about speed. I will also cover speed in this video. I'll be speaking about Alpenglow and Firedancer and all of that. But let me first speak about market fairness, because I think you're going to learn something new here. And so the problem, kind of like I alluded to in the introduction, is that on Ethereum, and to some extent on Solana as well, although not as much, you have a problem with MEV. MEV stands for miner extractable value. Basically, a miner can see what you're trying to do on chain before your transaction is confirmed, and then they can do all kinds of things. For example, they can front run. A validator sees your trade and places their own trade first to profit. Or you can have sandwich attacks. Let's say that you try to do a trade and I have a bot and I'm monitoring the mempool, and my bot buys before your large buy and then sells after, profiting from the price movement that you caused. Let's say you want to buy with $1 million and you want to buy some kind of small coin. I see that you're trying to do that. I buy before you buy, then your big order comes in, you push up the price and then instantly sell after you have bought. So it's a sandwich. It's a sandwich where you bought, you pushed up the price, I instantly sold, and the reason I could sell is because I just bought before you when I saw that you want to do a big order. So result, you buy higher and you sell lower, and the MEV bought profits, you lose. Next, Unfair execution. Transactions are not processed in the order they are submitted, and institutions need guaranteed and fair execution. And MEV breaks this. When you have different validators being able to pick and choose which transactions they execute, which transactions they don't execute, and there is no real punishment if you don't execute a transaction. There's no real punishment if you don't include a transaction in your block. The miners, validators can do whatever they want. So obviously, this leads to a potential risk of unfair execution. Next, you have a regulatory risk, because this is all manipulative behavior and red flag for regulators. If you are an institution, you're trying to go on chain, and you have this problem with MEV, is going to be a big problem, and obviously your clients will not like it. Even your own internal trading desk will not like it if you are an institution. So institutional players cannot operate on infrastructure that enables hidden market manipulation. And finally, you have loss of trust, because each and every transaction risks being exploited. And institutions require predictability, privacy, and integrity. So this is the problem mainly on EVM chains such as Ethereum and all of the L2s. There are some solutions to it where you have different validators that offer you to send transactions directly to them, and you have MEV boosts and other things that try to patch it. However, because the ecosystem and the infrastructure is not built for the purpose of being fair from scratch, it's very hard to fix. And on Solana, you have a bit better system where even already today, doing MEV is way harder because there is no public mempool like on EVM chains. Instead, the transaction goes straight to the miner. There is still a risk that that particular miner does something of these things that are listed here. So it's already way better on Solana, but there's still a risk that the particular miner that it's currently producing the block may do one or several of these things. And another reason why Solana is a bit better is because it's just faster. Obviously, when you have 10, 20, 30 seconds to do all of these things, it's easier to succeed versus when you have fast finality. So Solana is super fast. So if you try to do any of this, it's way harder than on EVM already today. However, like I said, Solana is not perfect, and Solana still has issue with this. Why? Because still the miner, the validator that is producing the block, they get the transaction directly, and they could potentially do one or several of these things, and this is how Solana will fix it. First and foremost, you have the mempool MEV. We already touched on this, but basically Solana has no public mempool, meaning that it's impossible to build a bot and monitor the public mempool because there is no mempool. On EVM, on Ethereum, you can monitor the mempool, you can see what's happening, you can try to front run or sandwich or exploit in other ways. On Solana, there is no public mempool, so already today, it's impossible to do this mempool level MEV. That's number one. The next problem we have to fix is the so-called private MEV. What does it mean? It means that I, as a miner or a validator, I have the power to rearrange transactions. And so the way it works right now on all chains, on EVM chains, on Solana, and on other chains, is that miners or validators, they work together with so-called searchers or bundlers, you can also call them. And the bundlers or searchers, what do? They are firms that are specializing in analyzing transaction flow in real time and seeing what miner could do or validator could do in order to profit, in order to extract value from the block. So I, as a miner, I work together with the searcher, which is a separate company normally. And this searcher, they tell me, hey, do this transaction, do this, censor this, replace this. And in real time, they give me a block based on all of these transactions that I have the opportunity to include. This searcher, they give me a block, a finished block, with maximum profit that I can take myself. For example, I replace some transactions, I replace this, that, I do some arbitrage, I see that there is some arbitrage that some people are doing, I remove their transactions, I do my own transaction with arbitrage, and I do a profit share. So some of this revenue that we get, that we extract, goes to the searcher, and I, as a validator, I have another income stream that helps me in my business. So it happens all the time. It is called private MEV. So how can you fix this? Because it is a very difficult problem. Most blockchains are made in this way where the validator can rearrange transactions select transactions and construct the block themselves. It's part of how blockchain works at its core. And Solana will fix it in 2 steps. The first step is called BAM. I think it stands for Block Assembly Marketplace, and it will be live already now in Q3 in 2025. It will only partially fix the problem, as you will soon understand, because it will not change the underlying mechanism of how transactions are executed. But then a bit later on, in late 2025 or early 2026, you will have this ACE, App Control Transaction Flow, which will fix it fully. But let me start by explaining to you this BAM. What's going to happen? What is this block assembly marketplace? So already in a few months, the Solana blockchain will have this block assembly marketplace, which means that instead of collaborating with one specific searcher and doing it behind closed doors and doing it in quiet, I as a validator now have this marketplace where all of the different searchers across the world can now bid to me, and they can pay me in order to include their version of the block. So as you remember, all the searchers, what do? In real time, they know how to rearrange transactions to extract max value. And so instead of just working with one privately, now I can work with all of them. I can earn even more money, but now I do it publicly. Now there is more transparency. Now everyone can see how different transactions are rearranged. And most importantly, everyone now can participate in this searching. And if you want, you can also start bidding on transaction rearrangement. So it's not a full solution. The full solution will be later on next year, but it's the first step to make it public so that the validators are incentivized to work in the open, and they can still profit from rearranging transactions, but now everyone in the whole world can participate and everything is fully transparent. And I really want to highlight that this is not the final solution, because at the end of the day, MEV still happens, rearrangement of transactions still happen, but this is something that can be deployed very quickly, and the Solana ecosystem is very pragmatic. When you can have a partial solution and you can have it within a few weeks, which is already going to happen with this marketplace, they go ahead and they ship that. The final solution is going to come later in 2025 or early 2026, and that final solution will be so that if you're a validator and you are actually messing with the block contents, you're trying to rearrange the block, your block will be rejected. Basically, that you're going against the rules, the consensus rules of the blockchain, the execution rules of the blockchain, if you try to mess with the contents of the block. And that's exactly what Solana is going to do when they introduce ACE, App Controlled Execution. So what is ACE exactly? ACE stands for Application Controlled Execution, and it's basically what it says. If you write an application, let's say that you write a DEX, you can specify inside the code, inside the smart contract, exactly how the transactions should be handled. For example, you can say first come, first serve. Whoever transmits the transaction first should be included in the blockchain first. That's number one. Number two, you can also have custom rules. Let's say that you want some other rules. For example, you want a speed bump. Speed bump, you can look more into it, but it's very important, for example, when you have leverage trading, that you have a taker speed bump, but that also can be custom coded into the smart contract itself. And so what happens is that the miner needs to follow this logic. If they don't follow the instructions that the smart contract has outlined, then their block will be invalid. So the whole blockchain, the whole network will now be checking so that all of the rules of the smart contracts are followed. And because everyone updates to this new version of Solana, all of the validators, if one validator still tries to rearrange or sandwich or do whatever, their block will be rejected by the rest of the network. So basically, ACE lets smart contract decide how their own transactions are ordered and executed, not the validator. And why it's important, it stops validators from reordering, front-running, or sandwiching user transactions, protects dApps from validator MEV, enables dApps to define their own fair execution rules. For example, first come, first serve, or batch auction. You can have different. First come, first serve is not necessarily the only one and the best solution for all smart contracts. It's just one of them. And so The way it works is that each app, each smart contract gets an isolated execution environment. So it's very easy for all of the validators on a technical level to follow the execution steps of a smart contract, and it's all isolated. Apps specify allowed ordering, inclusion logic, and even slashing rules. So in case, for example, you center a transaction that should be included according to smart contract rules, your block will not be valid, and you as a validator will miss out on block rewards. So validators must follow these rules, or transactions will fail or get rejected. Your whole block will get rejected. So all in all, the issue with validator MEV, where the validator rearranges, sandwiches, and so on and so forth, is fixed by removing validator control over execution. So it's a deeper level change of the blockchain. See, this takes months to fix, probably even quarters. We don't know whether it's going to be in 2025, really. Maybe it's going to be early 2026. So that's why it's not the first solution. It's going to come a bit later. The first solution is the BAM, the marketplace. This is the second solution. And this also gives trust and fairness. It enables transparent app-defined logic. So not only does it ensure fairness, it actually allows for many more new use cases. For example, with the speed bumps, and this is something you should research yourself, but it's a way for the DEX to ensure that before transactions are executed, they're frozen for a bit. And it's important for different reasons. But that is one example where in TradFi you need this kind of stuff, so that you can have even fairer markets. Because the whole idea with the speed bumps, which are very common in TradFi, is that in case you have high-frequency traders, their transactions are slowed down slightly in order for the rest of the market to be in the same pace. And this is another example which before wasn't possible, but now is possible. So it also adds scripting, custom scripting, customizability, and so on and so forth to the network, which wasn't possible before. But let's get back focusing on fairness. Let's get back focusing on MEV in particular. And of course, a logical question is, if ACE is so great, why do we even need BAM in the future? Do we still need this marketplace of searchers in the future or not? And the answer is that yes, BAM will still be needed, and you will still be able to do MEV, but only the good type of MEV. Let me explain the difference. So for example, you may still have different things that you can do in your block as a miner without being unfair or without being malicious. For example, if you see an arbitrage between DEXs and you don't drop or front run or sandwich anyone, you just see an arbitrage that you can utilize yourself, then it's good for the market overall, because it helps to equalize prices across markets and you can have a profit. So here, a searcher can still help you with that, and the BAM marketplace will be this marketplace where different searchers can submit their blocks to you and basically pay you to be included, and this way you will be getting a part of this revenue. And next, liquidation and lending apps. The way lending works on chain is that in case a loan needs to be liquidated, someone needs to call the smart contract function in order to liquidate that loan. And if you do this job of liquidating a loan which is underwater, you're helping the protocol and you get a small reward normally for doing so. So if you are a validator and you see such an opportunity to liquidate a loan, then you're helping the network, you're helping the lending protocol, and you get a small fee. So this is something that the searcher can also help you with. Next, batch auctions and different other things in the similar vein, where it's helping protocols, helping the network. So the MEV will still be there, but it's only going to be fair MEV that's helping the network. And you as a validator, you will have the privilege of seeing these opportunities first, because you're literally the one that is producing the block, and this is not gonna go away, and this is all going to be facilitated via BAM, via this marketplace still. And this is the bad MEV that's also currently happening, that ACE will fix. This is what ACE will fix: front running, sandwich, censoring for profit, and so on and so forth. So everything that is hurting someone else, this is what will disappear. This is what will be against the protocol rules, and this is what ACE is fixing. And as you can see, the next thing I want to discuss is how Alpenglow, which is another update to the system, which is going to come late this year most likely, is going to help with censorship or delay of transactions, which is something that the validators can still do. So let's speak about Alpenglow. What is Alpenglow? Alpenglow is a big upgrade that is coming to Solana within the coming months, which will take finality from 12 seconds to approximately 150 milliseconds. So it's a 100x improvement. Basically, it means that when you do a Solana transaction, you know that it's confirmed basically instantly. Within 100 to 150 milliseconds, it's confirmed. It cannot be reversed. So this is TradFi level speed. You can have the fastest blockchain, but if it all can be reversed, for example, when you use an L2, you don't have finality on L1. It happens on L2. And then maybe in a day, maybe in a few hours, I mean, God knows when it's going to come to L1, finally get finalized. You never know when it's finalized or not. With Solana, within 150 milliseconds, you will know that the transaction is fully finalized. And so the reason why it's so important is obviously speed, and we will soon speak about speed, but it also ensures that you have less time for censorship, you have less time for MEV attacks. Basically, everything needs to go through the protocol in real time, and it's just less time to mess with things. It's less time to rearrange or like try to do different things, because everything is so fast. And let's say that the validator tries to censor you. Well, because the finality is so fast, you can just retry the transaction within 100 milliseconds, and another validator will accept your transaction. So basically, it means censorship meaningless. And a big question, of course, is how can there be censorship if we just spoke about the fact that ACE will remove censorship? And there is a bit more nuance to that. ACE will remove censorship for profit, but it will still be possible to censor by omission. But if you try to profit of censorship, ACE will notice that. But just missing a transaction could still be valid under ACE if you don't try to profit from it. And basically the way it's going to be is that if your transaction is dropped for whatever reason, because everything is so fast, you can just retry it, and very, very quickly another validator will be able to include it. So basically, it's instant. Everything is instant for users, and it enables high-frequency apps to function, such as trading, games, payments, and so on and so forth. But we will speak about speed very, very soon in this video as well. For now, let's just focus on fairness, and Alpenglow ensures that nothing can be censored. Finally, let's speak about MCL, multiple concurrent leaders, which basically ensures that instead of having one miner, one validator creating one block at a time, you will have multiple validators collaborating, creating that same block, which obviously ensures that one validator at a time doesn't have too much control. So the way Solana works today is as follows. Let me show you here. You have one validator at a time constructing the block, and that validator builds the whole block. Basically, for 400 milliseconds, they can build it. All transactions go through that validator. So currently, the validator, before all of the upgrades we spoke about, they can reorder, delay, censor, and so on and so forth. And so basically, it's a centralized power, and you have MEV and censorship risk. With multiple concurrent leaders, multiple validators are going to be constructing the block at the same time. The block is split into multiple chunks, and each leader handles only a part of the execution. The final block is assembled from multiple parallel pieces. So basically, no single validator controls the full block. Execution is parallelized, faster, and more resilient. So instead of having one party cooking the block, now many parties cook the block. Obviously, this ensures that everything is more fair. You alone don't decide anything. And so together with all of these different pieces, we can say that Solana is becoming fully parallel, censorship resistant, and fair blockchain, which is ideal for instant capital markets. And this MCL, multiple concurrent leaders, is going to be a bit later. It's going to be in late 2026 or early 2027. So we'll have to wait a bit for that. But in the meanwhile, we have BAM, we have ACE, we have Alpenglow, and so much more when it comes to speed. Because now that you understand the full stack solution of fairness, let's speak about speed. So what kind of KPIs, what kind of metrics do we have to achieve in order to be able to host all of the traditional markets on chain, and even to invent new markets on chain? Because honestly, when we have a new tech such as blockchain, it's not only that we take traditional markets, we're also going to have all kinds of new markets on chain. But let's focus on the KPIs. First and foremost, we need to bring the finality time down a lot. So this is already going to happen in Q4 2025, Q1 2026 with Alpenglow. Next, you need to reduce the latency. And as you know, in Solana, one of the things everyone says is increase bandwidth, reduce latency. Increase bandwidth, reduce latency. Anatoly says that, everyone says that. It's super clear where the network needs to go. And so reducing latency is part of that. And it's going to go from 400 to 600 milliseconds to 200 milliseconds. And the 00 and Firedancer are going to fix that. And I will soon explain to you both of them, because 00 in particular is super interesting because it's not software. It's not only software, it's actual fiber. It's actual physical fiber network that is going to be used specifically for blockchains in order to have crazy latency. Next, throughput. You will go from 1.5K to 2K transactions per second to over 10K transactions per second, and even higher with Firedancer, SIMD, MCL, and so on and so forth. I will soon explain to you step by step. Next, block propagation is going to be way smoother with 00, with the fiber network and Firedancer, the new client. Next, execution parallelism. So we discussed MCL, this multiple concurrent leader, as a way to stop censorship and to stop MEV, bad MEV, but also this means that things can be done in parallel. When you have multiple parties constructing the block, now they can collaborate in real time, and you will have execution parallelism. Okay, so everything is going to be super much faster, and the end result is going to be instant transactions. I mean, you do something, it's instantly confirmed, it's instantly finalized. You're gonna have 10K plus TPS. I mean, probably even more. This scales with more and more hardware. This is not a hard limit. It's going to scale with more and more hardware. And all of this is done by Alpenglow, 00, Firedancer, SIMD, and MCL. And let me go through step by step what these upgrades are. So the first upgrade is pretty straightforward. It's basically increasing the block size. It is the SIMD upgrade, which already partially increased the block size of Solana. It happened a few days ago, I think last week. But they're going to do it even more. So this year, they're going to increase it even more. And this is simple, this is straightforward. The philosophy of Solana is that each and every year, infrastructure becomes more robust, computers become more powerful, you have all kinds of improvements to computation. So just each and every year increasing the throughput a bit by increasing the block size makes perfect sense, and this basically gives more TPS headroom. So this one is super easy to understand. Next, you have 00 fiber network. This is a project in itself you should check out. So basically 00 is a deep-in protocol that enables anyone to rent out private fiber. So there are all kinds of fiber cables across oceans connecting Europe and the US and Australia, basically this infrastructure that makes the internet work. Now, the way it works is that you can actually rent a portion of that fiber. Some of that fiber is unused. Some of that fiber can be rented for money. So for example, you have high frequency traders, financial firms, renting specific frequencies in those cables. You can actually do it for the correct money is possible. So 00, what it is this protocol which enables anyone to contribute bandwidth. So in case you have this bandwidth, maybe you have rented it or somehow else you have access to the fiber bandwidth, you can add it to 00. And then networks like Solana can use 00 in order to have this instant communication. And basically this means that Solana validators don't have to communicate via the open internet, and instead they can communicate in this fiber network directly. And obviously this is going to be way faster. You're going to have super fast communication. This is going to be communication at the speed of light, which is the whole idea with Solana. Anatoly has been saying it many times. It's all about having the network as fast as the laws of physics allow, and obviously speed of light is the fastest. So all of this is going to come later this year. Let me actually see the exact timeline. Is actually going to be already later this year in Q3. And the question is it only for Solana? No. So 00 can be used by other chains, and I think they specify which other chains are here. I think Sui is gonna use it and others as well, which is good. But Solana, I think, will have the biggest impact. This will have the biggest impact for Solana. Why? Because Solana does 70% plus of all of the transactions on chain. So obviously this is where most impact is gonna be felt. But 00 is not exclusive to Solana, and it's important to make it super clear. In the future, other blockchains can also use 00. But one thing is clear, and that's that chains like Ethereum will not be using 00. The ones that I've seen is Sui, it is Aptos, it's all of these chains that are focused on being super fast. Because for Ethereum, for example, it makes no sense to even use it because they don't even try to be fast. They have a totally different philosophy, but all of the chains that want this super fast, sub 100 millisecond finality, ideally, they will obviously need 00, and 00 will be serving them. But out of all chains that are using it now, that will be using it this year, like Sui, Aptos, and maybe some other one as well, Solana is the one where this will have the most impact. Why? Because Solana is doing 70+% of all transactions across all blockchains. Okay, moving on. The next upgrade is the Firedancer. Now, the Firedancer is basically a rewrite of Solana in C++. It's not really innovating in the sense that it's changing how the protocol works or changing the rules of the game or anything else. It's just taking the existing protocol and doing it in C++ instead of Rust, which is a faster language. C++ is going to be running way faster, and it's optimizing. It's basically optimizing as much as possible. And so, what are the results? This is what you get as a result. First and foremost, peak TPS on a testnet. The current implementation can do 60K transactions per second, and the Firedancer can do 1.2 million transactions per second. Now, this is basically running the client on one machine and just seeing how fast it can go. These transactions per second, for example, 1.2 million, it doesn't mean that Solana will do 1.2 million transactions with this client. Just like with the current client, it could theoretically go to 50K transactions per second, but Solana now is at approximately 1K transactions per second. So this is basically if you run just one computer and you run the software and you just bombard it with transactions, how fast theoretically can it go? So a comparison could be that you have your car and you just lift it up and you press the gas pedal. How fast will the wheels spin? Okay, obviously it's very different to actually driving it, going across mountain, going and taking turns. Is very different. So here, this TPS, it means if you just run it as fast as possible on one machine, how fast is it? And if you compare to ETH, I think ETH TPS is like 1K or maybe 10K or something like that. It's between 1 and 10K for gas. But when you look at the TPS of actual ETH, it's like 12. Okay, per second. Why is it so that this TPS cannot be achieved in real life? It's because this TPS is, like I said, it's not counting the consensus, it's not counting sending the transactions across the world and having the network agree on transactions and checking everyone in the network has checked everything and so on and so forth. This is pure, you have the software on your machine, how fast does it run? Now, the magic is if you have Firedancer, which can theoretically run at 1.2 million transactions per second, and you have Alpenglow, because Alpenglow, which we mentioned before, it is the upgrade which will make finality faster, and finality is what's needed. This is the next upgrade here in the list. And finality is what's needed in order to take this time of coordination down. You can have Firedancer running at 1 million transactions per second on one machine, but if it has to wait for the entire network to agree and to finalize transactions and to shake hands, everyone is agreeing which transactions we have, then it doesn't matter how fast Firedancer is. But if Alpenglow is super fast and you have Firedancer, then it's magic. Then they come together and they do something magical here. So the biggest bottleneck is actually not the client. Firedancer is still nice, Firedancer is still gonna do a lot, but it's basically running as fast as possible on one machine. But once you have a block, now you have to wait for the entire network to agree, this and that. And this is where Alpenglow comes in, and it makes it super fast, so that Firedancer can actually run as fast as this Alpenglow allows. But Alpenglow will always be the bottleneck for Firedancer. Firedancer 1 million means that there is no consensus, you just run it yourself and that's it. So that's that. Next, you have ACE, what we discussed before, the fact that smart contracts can define how they are executed and what kind of transaction order needs to apply and so on and so forth. So all in all, it makes it super clear how transactions are processed. It makes the logic easier and the smoother transaction handling will take place because everything is super clear how everything should be processed. And finally, you have this multiple concurrent leaders. The fact that when you have different parties building the block, it can be done in parallel, and obviously that's going to help a lot. So as you can see, this roadmap that we have in front of us, both when it comes to speed, which you have right here, But also when it comes to fairness, it's going to be quite quick. I mean, literally within a year, most of it is going to be live. And this is the magic of Solana. How quickly they operate, how quickly they ship. All of this is going to be within super foreseeable future. And this is why within the coming 2 to 3 years, I think we're going to see trillions moving from TradFi on chain, because now there is literally no reason not to. It's as fast and as fair, and you as TradFi, you get just all of the upsides. You get to participate in this global on-chain markets. You have global liquidity. Anyone in the world can participate and trade. It's going to be quite insane. I don't think people understand what's about to happen here. When you have decentralized infra that works exactly as Nasdaq, but even better because it's worldwide, because it's international. It's the same system for all countries, and it's Solana. It's going to be quite crazy. So guys, I hope you understand the roadmap of Solana. I hope you share my excitement for Solana, why I'm so excited. As you can see, my excitement is not out of thin air. I really think that the only credible chain that can offer something that can work for institutions, for degens, to really have a decentralized Nasdaq on chain to serve any financial use case, it is Solana. And as you can see, the roadmap is super clear and is going to be done within the coming year, most of it. And the adoption is going to be monumental. So in terms of price, I think we can easily reach 500 within this bull market, and very probable that we're going to reach 1K and above. Let me know what you think in the comment section, and I'll see you in the next one. Be sure to subscribe, smash the like if you want videos like this, and have a good day, guys.